patterns. Trading patterns are the formations of candles on the graph that imply reverse of the trend or its continuation. Many of you have already heard about them, but most traders, especially beginners, make the same mistake. They trade patterns alone without other analytical arguments. Please remember from the very beginning. The probability of pattern workout is 50% and no more without additional analysis. It should be combined with another arguments. Even more, graphical pattern is not the argument of the first or even second order. Let's start with triangle. For scalping, such pattern is extremely relevant due to the pile of stop losses placed below and above both sides of this figure. We will talk about this later. The breakthrough could occur at any side. Our mission is not to miss that. There is a good example of triangle pattern working out. There was the breakout from the triangle, but when I was analyzing this setup, I collected many factors. Trading just a triangle wasn't the only factor I used for my analysis. The breakout of the triangle is possible to both sides of the triangle. That's why we should watch another arguments to figure out from which side the breakout is more probable to occur. More preferable is to trade triangles along the main movement of the trend, treating this pattern as a sort of consolidation. Taking into consideration that it's better trading along the trend, it could be bullish, bearish pennant, however the mechanics are the same. Double bottom, head and shoulders, and rising wedge. Such patterns are working out perfectly, especially when the price rapidly touches a strong level for the first time. We can find such setups at different time frames, and such patterns work extremely well in combination with other factors. Here you see a kind of double top. In combination with clusters, we see that indeed the price can't go higher. That was the local reverse pattern. Another example of how double bottom or double peak pattern works out. The core reason of opening this trade was the price touched a strong level for the first time, then it made double peak. Taking into account these two factors, I opened short position. I used this pattern as additional one, not the core reason of my trade. Another situation where I used double bottom pattern. Here I opened the position along the trend, as you see, and in this part double bottom was the reason and the entry point along the trend. Head and shoulders. This is the most popular pattern and my favorite one. When we are supposing the end of correction or the pullback from a huge limit order, watching it in the order book or strong level, head and shoulders is the perfect sign to open trade on the peak of the second shoulder or better on the neckline. There was the good example. The price broke this consolidation, turned back to the middle of this consolidation, and then it showed something like that, head and shoulders. First of all, there is the middle of the seller's zone, market profile area. Here there were some limit orders and points of control. Finally, there was head and shoulder patterns. And look how it worked out, starting from the peak of right shoulder, 2%. It's quite good movement. And this is not the end. The potential of this movement is much deeper. Another extremely important pattern is not a pattern, more than like a setup. While trading along the trend, what we always recommend to do, we can search such zones called market profiles, market profile areas. Market profile is represented by the zone with the maximum volume of executed orders inside the trend. These zones of consolidation, buyers or sellers lower their position and push the price to continue the trend. Then, when the price getting back to this zone, that participant pushes this price away again. This is one of the best examples of how it worked. There was a consolidation, breakout, retest to this zone, and the sellers usually protect this zone and doesn't allow price go higher. The participant pushes it back and indeed price goes lower. Let's see another example. Another one zone, white zone. The price has broken this zone and then it turns back but finally pushed away. Here we should search for entry points. That was ideal entry point to open short position, but we should find another arguments. For example, at this point we should have searched for extra arguments in order book. For example, huge limit orders somewhere above this level, or points of control from which we can open short position and hide our stop loss above. Even on the daily time frame we see such situation. Look at this. Here we see market profile level and the price coming back, breaking the structure, and then it touches this level and the buyers push this price again higher from this zone. Look at this market profile. It really works extremely well. From the middle of this zone, buyers are pushing it higher. They can't let the price goes lower as they will bear losses. So I think the principle is clear. Other trading patterns are quite simple and the mechanics of the patterns always the same. All these patterns we should know for searching the setups for scalping trades. However, we should find additional arguments to open the trades, like high activity of market participants, points of control from where we can open the position in advance, and finally the limit orders that price could break or pull back from it. That's quite a good example of the rectangle pattern, and that was the breakout from this rectangle. I opened the position on high activity before the breakout. I hope this information is of great use. Don't forget to subscribe for our channel and for our Telegram channel with free setups with extremely good statistics. All the links in description. Stay tuned and be in profit.